Huge promises of the future may sound exciting, but they can cost you a fortune, and Ford just learned that the hard way. Despite spending billions of dollars on self-driving cars, Ford's autonomous driving division, Argo AI, is shutting down. In today's video, we talk about what went wrong with Argo, plus more on the federal jury in Detroit ordering Ford to pay up to $105 million in its trade secrets case. Let's dive in, starting off with Ford losses and the closure of Argo. It's a sad end for the startup that emerged with massive promises and an even bigger funding of $1 billion. Led by Ford of Dearborn, Michigan, Argo was the future we thought was here, and there was a surge in autonomous vehicle startups that same year. And according to Crunchbase data, venture funding in the industry increased from $1.1 billion to $5.2 billion between 2016 and 2017. Plus, the number of funding deals also rose by 39%. But it looks like that love is starting to fade. Argo has stopped attracting customers. In fact, Ford, the US automaker giant, has blamed a sizable portion of its most recent billion-dollar loss on the failure of one of its autonomous driving divisions. Just recently, the business website TechCrunch reported that the startup Argo AI is closing down, and certain parts of the company are being divided and integrated by Ford and Volkswagen, two of its primary backers. Ford and Volkswagen have contributed the majority of the US $3.6 billion that Pittsburgh-based Argo AI has raised over the years. Argo AI was founded in 2016 as an autonomous driving technology company with $1 billion in backing. According to Ford's most recent financial reports, the automaker recorded a US $2.7 billion non-cash pre-tax damage on its investment in the startup, with a net loss of US $827 million recorded for the third quarter of 2022, which is between July and September. We're not sure yet what losses Volkswagen has suffered following the closure. What's more, Ford thinks the future isn't here just yet. Despite Argo's initial ambitious plan to launch self-driving cars by 2021, Ford CEO Jim Farley now acknowledges that widespread adoption of autonomous vehicle technology is a long way off. But according to Mr. Farley, times have changed, and Ford now has a fantastic opportunity to give millions of customers back their time, the most valuable resource in modern life, while they're in their cars. He said that Ford has an important responsibility to create Level 2+ and Level 3 autonomous driving applications that are outstanding and unique, while also increasing safety on the road. Employees at Argo AI were informed they would receive a sizable severance package during an all-staff meeting, and with some receiving offers from Ford and Volkswagen. Ford's move highlights the pressure on automakers to make difficult decisions as the financial demands of switching to electric vehicles continue to increase. This is in a stark contrast to rival General Motors' GMN decision to increase investments in Cruise robotaxi unit. Let's look at how well GM is doing. GM recently announced a net profit of $3.3 billion on record third quarter sales of $41.9 billion. The company also updated its forecast for a net income of $9.6 billion to $11.2 billion for the entire year. GM executives generally expressed optimism about the company's earnings call, whereas Ford executives were more reserved and cautious. John Lawler, Ford's chief financial officer, stated in a briefing, "We can see the likelihood that the United States could enter a mild or moderate recession the following year. There is a chance that Europe will experience a more severe decline." Ford stated that it expects adjusted earnings before interest and taxes for the entire year to increase to approximately $11.5 billion, up about 15% from the prior year. Moving on to the rocky future of AVs. So far in 2022, the amount of venture capital investment in autonomous vehicles is about $4.7 billion, which is the lowest amount since 2017. In fact, funding in 2022 is still 10% lower than 2017, but it's still too early to tell if investors are putting the brakes on self-driving technology. The amount of funding decreased between 2019 and 2020, but it saw a significant increase in 2021, which we're going to call an outlier given how much money was pumped into every sector that year. And the subsequent economic situation that followed can be held responsible for 2022's less than favorable results. Ford, too, says that it will eventually purchase autonomous vehicle technology somewhere down the road. Volkswagen, Argo AI's other investor, withdrew from the business. Instead, it will continue to collaborate with its in-house autonomous vehicle developer, Cariat, and deepen its partnership with Mobileye, Intel's autonomous driving software that went public just recently. Mobileye's valuation was slightly higher than a quarter of the $50 billion Intel predicted for it in the previous year, and lower than the $20 billion it predicted last week. Earlier in October, Crunchbase claimed that self-driving vehicle companies' stock market valuations had fallen by a combined $41 billion since 2020. As if the shutdown of Argo wasn't enough, according to Reuters, the Justice Department launched a criminal investigation investigation last year looking at several crashes involving Tesla's autopilot driver assistance system and whether Tesla made false claims about the capability of its driver's assistance technology. Let's look at Argo AI and Tesla's futures. Level 4 and Level 5 driving automation were the goals that Argo AI and Tesla were both working toward, though they both employed different approaches to get there. While Tesla used its customers and even the open roads of the United States as its beta testing grounds, Argo AI worked with authorities and stakeholders like cyclist and pedestrian safety organizations to help shape its product. During this week's earnings call, Ford's Chief Product and Technology Officer, Doug Field, stated that Level 4 self-driving is going to be a really tough problem to solve. In fact, the task will be the toughest problem of our generation, according to a longtime Tesla engineer who also worked on other projects. Ford claimed that the development of Level 4 and Level 5 fully autonomous tech was a capital and a talent issue, and that the automaker did not know how much capital and talent it would require to solve the issue. Ultimately, Ford and Volkswagen refused to pay the massive price. And the CEO of Tesla, Elon Musk, on the other hand, recently reaffirmed his confidence in his company's capacity to address the Level 4, Level 5 issue. During the most recent earnings call for the company, Musk said that by the end of the year, you won't have anyone in the car. And without a doubt, that's what I have in mind for next year. He also said that he believed they also release an update the next year to show regulators just how much safer the self-driving car is compared to the average human. But it isn't all that simple. Now, for the automaker's struggle that continues. But with the DOJ, SEC, and NHTSA, among other regulators looking into dozens of crashes involving Tesla's self-driving software, it's unclear when Tesla will fully launch its Level 4, Level 5 platforms. Although automakers have invested close to $75 billion in the development of autonomous technology, there is currently little to show for it. So what happened to an industry whose addressable market size, according to UBS, will be close to $2.8 trillion by 2030? Nobody appears to have fully factored in the challenges that would make the self-driving puzzle so difficult to solve from a technological, capital resources, and policy perspective. We can't say still what the future holds for AVs, but for now, it doesn't look like they'll be seeing the light at the end of the tunnel anytime soon. Speaking of struggling, Ford seems to be having the worst year since its inception. Next up, Ford to pay software company $105 million in trade secrets case. Ford Motor Company was ordered by a federal jury in Detroit to pay Versata Software Incorporated $104.6 million. The company was found guilty of violating a 2004 licensing agreement and misappropriation of trade secrets. After a 15-day trial, the jury deliberated for 2 days before finding Ford guilty. Ford received a license from Austin, Texas-based Versata to use its automotive software from 1998 to 2015, according to the company. This helped Ford's engineers and marketing staff to collaborate on and design vehicles with seamless real-time updates across the globe. It claimed that Dearborn, Michigan-based Ford started copying its software when it got tired of shelling out millions of dollars in yearly licensing fees. In 2014, Ford reportedly rejected a final offer to license Versata's key software for $17 million a year. The jury awarded more than $82.2 million for contract breach and the remaining $22.4 for misappropriation of trade secrets. And Ford stated, "While we respect the jury's decision, we believe the facts and the law did not support this outcome. Ford will challenge the verdict." Dan Webb, a partner at Winston & Strawn, who represented Versata, claimed the jury granted the company about 85% of what it sought after Ford raised what he called a phony defense that it owned Versata's trade secrets. Webb said it was a very favorable verdict and they're super happy with it. Ford requested a court order stating that it did not violate Versata's intellectual property in April of 2015, and this is when the legal dispute started. And with that, this video is a wrap. What do you think about Ford pulling the plug on Argo? Comment below and let us know. And don't forget to give this video a thumbs up and subscribe to our channel for more. See you at the next one.